Hi, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. And a happy St. Valentine's Day to everyone. I hope that you gentlemen all went and bought a flower for that someone fair in your life. For the past 50 years, wherever I have worked, I have always brought a rose to every one of our female staff to let them know that we do appreciate them and all that they do. And of course, I always get one for my lovely lady. It's not too late to stop at your florist on the way home. But if you do get one for your spouse, for the first time in years, don't tell her where the idea came from. Years ago, the wife of a former partner of mine was so surprised when he came home with a rose for her that he sort of had to blurt out that it was my idea. And of course, it ruined the whole purpose of the Valentine. Anyway, to business. Every week, we give investors like you a look at our proprietary Sva Charting System, that's Structural Valuation Analysis, a charting and analysis system developed by my late partner and guru, physicist-economist Dr. Vern Attrell. Our system uses not just price, like most technical analysis, but also takes into account the balance sheet, income statements, cash flow analysis, and street estimates from those all-important Bay and Wall Street analysts. In our FANG Friday, I use this system to analyze the 6 FANG stocks, plus other stocks from time to time, so to give you an idea of how our clients use this system to do well in the market, and of course, and in particular, to stay out of trouble, and how you can too. Since we started with our FANG Friday, our returns have done well against just buying and holding the FANGs. And we are simply doing what you can do if you use our Sva analysis for any and all of the 4,000 stocks that we track. Let's start today with a big fat earnings surprise, Nvidia. And remember last week we were talking about Nvidia, and I said, look, the stock now has been sort of drifting, well, banging up against, actually not drifting, but banging up against its HB2 price. That is 12 times its book value. And when we get a stock that persists in doing that, very often that is a precursor to a breakout. And sure enough, late last week we did, and then the stock reported, and of course it's had a huge run today. So when you see that kind of formation in our charting service, that's often a precursor to a nice jump in the stock. Amazon, same kind of, well, actually not really the same kind of thing. It drifted sideways and sideways for a long time. And then as one of our audience, Mike, pointed out a little while ago, after all of that, he decided he'd better buy some just in case, and that turned out to be a good move because, of course, the stock closed in on its HB3. That's about 15 times its book value and has since broken out and moved further. I don't know whether the company actually will be able to rise as far as its HB4. It's going to require one heck of a strong market to get there. But I have to say that the markets seem to want to go. You load on all those deficits and stimulus and everything else on the market and flush the place full of cash, and who knows what on earth is going to happen before the election in November. Netflix, well, it's kind of the same sort of a story, as Nvidia, although it had actually come down to a break point, and then it stayed, and then it broke out. I wasn't sure whether it would pull back or not, but it's kind of picked up strength, and it looks now as if it's heading for its HB4 price. Now, don't expect that this stock is going to be supported by anything that looks like value. The PE ratio of the stock is 70 times, and the fair market value currently is minus 75% below where the stock price is trading today. But that's okay. It's that kind of market. Well, let's compare Netflix in particular with Facebook, which has been riding its mid-super growth price. That's 5.5 times book value, one of our important breakpoints. It's been riding it and riding it and riding it for some period of time. It tried to get away and have a little bit of a run, but pulled right back again. I don't know whether this stock actually can earn enough and fast enough to make the next breakpoint, which is its bubble price at 7.5 times book. But listen, if you're just in Facebook and you're in it around the MSG price, well, the balance sheet's rising at about a 16% annualized rate. So that's not the worst kind of investment in the world that you can make, quite frankly. Here's our friend Alphabet, and again, you see that recurrent pattern. Up against, bang, bang, bang. Can't break through, and then it does. Now the stock breaks out. It pulls back, of course, to test it. That's a very, very common technical pattern, and we see it all the time in SVA. A stock breaks out, it pulls back, and then starts to go. And who knows, can it get up to the next break point? Well, that's only 5.5 times book value, although I have to warn you, of course, that the fair market value is quite a bit below that. And also, when we take a look at the 10-year pattern of this company, we see that every time the stock has gotten above its mid-super growth price, its MSG price, okay, it's gone there for a little while, but it has not been able to kind of complete the job and get to the MSG price. So whether it will this time or not, I don't know. Mind you, I guess the kind of move that would push Amazon and perhaps even Facebook up to the next breakpoint probably will be able to lift Alphabet, but history is unfortunately somewhat against you. Now, here's Apple. Well, wait a minute here. This is not the chart that I showed you last week, is it? In fact, let's go and let's see what you could see last week. Well, this is, okay, this is before we got the recent balance sheet. And remember that I had told you a number of times, okay, that we were wondering what was going to happen with Apple's balance sheet. You see, the stock, the company had been buying back stock, and the balance sheet had been, therefore, the average price to book had been falling and falling, and then we had that rise, and we did kind of wonder when we got the new balance sheet, what was going to happen. Well, that's what happened. That's what happened. The stock made what we call an inadvertent breakout. Okay, state transition actually is the full name for that breakout. And now what we see here is a company where, or a stock, I should say, where if the stock sets back, it will find support at $295 roughly. And therefore, if we are going to get a sell signal on the company, and the stock is 35% overvalued, by the way. If we're going to get a sell signal, it's not going to be way down where it was before. It's going to be actually up fairly close to where the stock is trading at right now. Now, perhaps it can go on to its HB3. If it does, that will be a new all-time valuation high going back for 35 years for this stock. We are watching this company with some interest. Finally, we end up with our friend Microsoft, and of course, I had pointed out that the stock it had been banging and banging against the ceiling, and finally broke out again. See, it pulled back there, and then it gradually been picking up, and then with the earnings, that stock has been really accelerating away, and I think should be able to manage to get to $199. It's HB2, which is 10 times book value, 12 times book value, fairly easily. Anyway, that's it for FANG Friday. I hope that you have enjoyed it. If you are interested in taking the next step in your investing journey, like so many of our clients have, then visit our website or give me a call. Or if you're in Southern Ontario, come on down to our offices in the heart of downtown Toronto at 130 Bloor Street West. I'd love to chat with you and show you how you can improve your returns and build your confidence in the market. We do offer introductory pricing. We'll explain how to use our 4,000 charts, and best of all, the service is completely tax deductible against your income. So, as they say in Mexico, it's practically free. Anyway, why don't we get started? Give me a call at 416-489-3603, and we can get you started on your way. This has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.